In this video, we're going to be testing out a 3-bar momentum setup. The setup consists of either 3 green candles or 3 red candles with expanding ranges. And this setup pattern looks a little bit like this on the chart. And once we've seen that momentum pattern, we go with the trend, trading in the direction of the trend, expecting a trend continuation. We're going to be testing this setup on daily bars using 15 years worth of data and testing it using 14 different Forex pairs. Using that entry setup that you've just seen, we're going to be testing out a couple of different exits too. This strategy is another one which I've found on a great resource page on a website called Oxford Capital Strategies. They call it 3-bar momentum pattern. Once I've tested the strategy and I've got all the results, I'll then enter them into the Forex strategy database, which we're building here together on YouTube. The good news is I'm giving you, as viewers, free access to this strategy database. In the database, you can see exactly what strategies work and what don't work on all of the different Forex markets. Each time we add more strategies, then the database as a resource will become more and more useful. And I'll leave the links for the strategy database down below so that you can take advantage of it whenever you want. Let's first quickly take a look at how this strategy works, and then we're going to have a look at the test results. Rather than recreating the rules, I'll just show you the rules which Oxford Capital Strategies have written down. So if we go to the resource page, and we're looking at the 3-bar momentum pattern. And you can read all about it here, including looking at the rules and their test results on the futures markets. So here's what the setup looks like. This is for a long. So we're looking at the true range of 3 of the bars. We want to see the true range of today greater than the true range of yesterday, and the true range of yesterday is greater than the true range of 2 days ago. And rather than read through all of these, you could just pause the video or go to the Oxford Capital Strategies website and have a look through this yourself. And what we'll end up with for a long bar pattern is something that looks a little bit like this, something that I've already shown you a little bit earlier. For the short setup, the expansion in the true range is going to be the same, but then the other rules are going to be pretty much the opposite. And we'll end up with a setup that looks a little bit like this for short trades. And the minute we see that short trade setup or the long trade setup, we either buy on the open of the next bar or short on the open of the next bar. And we're going with the trend. We're also going to look at filtering long and short trades. And we're going to do this by looking at the highest highs or the lowest lows over a given look back period. So if we have our long setup, then if we're going to use the long trend filter, we look at the high of today and we see if, based on yesterday's bar, it's higher than the highest X bars back, and that could be 5 bars back, 10 bars back, and that's something which we're going to test. So that's our setup and our filter, and then entry, like I've already said, it's buy on the open of the next bar after the bullish setup. And the exits are very simple too. We've got our nth day exit or an X bar exit, which means just exit after so many daily bars. So it could be 2 bars, 5 bars, 10 bars. That's something that we're going to test. And we've also got quite close stop loss. So for long trades, a sell stop is placed at the lowest of the pattern low minus 1 tick. And the short trades, the buy stop is placed at the highest high of that 3-bar pattern plus 1 tick. So if we go back and look at this pattern here, the stop loss would be above the high of this highest bar here. Okay, and for the long trades, the stop loss will be just below this low here. And we've also got a kind of a fail-safe stop loss, a wide stop loss, and that's at 6 times the average true range over the last 20 days. I've programmed these rules into MultiCharts, and we're going to be testing using data from Oanda from January 2008 through to April 2023. And the results that you're going to see, I've programmed it so that we're going to see them in pips. So if we see that a particular market makes 3,000, then that's 3,000 pips. The bullish and bearish 3-bar pattern and the stop loss always stay the same, but that look back length for the filter does vary. And I've already done some tests looking at varying that different length for the filter. I've tested lengths between 2 and 40 days for the filter And if I'm using a length of 2, that's actually taking all trades, there's no filter. And I've tested between 2 and 40 for 4 different exit durations. That's 4 tests of the look back length between 2 and 40, using an exit of 2 days, then again for 5 days, then again for 10 days and 20 days. So 4 separate tests across the complete portfolio of markets. We're not looking at individuals, we were doing this test across the whole portfolio. I'm not going to bother showing you the results, but to briefly sum it up, I found that the shorter the look back length, the more net profit made. And in most cases, using no filter at all, so the look back length would be set to 2, then that's what works best. Therefore, the tests and the results, which I'm going to be showing you, are only going to be the results from testing different exit durations. I'm not going to be using any trend filter and doing things slightly different to how I normally do these testing videos in terms of results. I'm going to show you the complete test. I'm going to run an optimization of an exit duration between 1 and 30 days. I would normally just pick maybe 3 different exit durations, 5, 10, 20 days, but I want to show you the complete optimization for this. And once we've seen the optimization results, I will pick one length which I think is pretty stable, and then look at the results of the complete portfolio, and then look at the individual markets. And then as a bonus, I'll pick the market which I think performed the best out of the portfolio, and then we'll take a deeper look into that market just on its own. So let's go and have a look at that optimization. Here we are in the MultiCharts portfolio trader, and we can see that we've got our 14 Forex pairs down here. The strategy which is in play is the 3-bar momentum strategy. And I'll show you the results from the optimization. Remember, we're not using the trend filter here, and I've optimized the exit duration. And from here we can see we've got net profit on the y-axis, and then down the bottom here we've got the exit duration from 0 through to 30 days, or actually it's from 1 through to 30 days. And take note that this is the 0 line of the net profit. So anything below this is actually a losing strategy. So we'll look at it in spreadsheet form. You can see here we've got the bar exit between 1 and, scroll down, we've got 30 days. And we can see that exiting after 1 bar does work, 2 bars does work, but then it goes into negative, and then it starts to work again from 5 bars all the way through to about, well, solidly working 10 bars. And we can see that on the 2D graph. And we note that the best results are just around this area here. For example, 6 or 7 days. I won't choose the best, which is 6. Let me select 7 days. And we'll look at the results for using the 7-day exit. So we already know that the net profit is 4,000 pips. The equity curve is like that, which is not very nice. Remember, this is across all of the Forex pairs, so 14, it's the portfolio. But let's have a look at the individual markets. Australian US dollar is profitable, and the equity curve is not bad. So look at the size of the average trade. We've got a big average trade here at 47 pips. I haven't included any costs in the results, so by the time we've paid some costs, a few pips worth of costs, then we've still got a large amount of profit with an average trade of 47 pips. Canadian dollar, Japanese yen is not profitable. Euro pound is not profitable. Euro yen is profitable. A reasonable average trade, 18 pips. But the equity curve is bad. Euro New Zealand is not profitable. Euro dollar is barely profitable. Pound Canadian dollar makes a bit of profit with a bad equity curve. Pound Japanese yen is profitable, although it's got a bad equity curve. It looks like most of these gains were made very early on, probably in 2008, and then it's just gone sideways ever since. Pound dollar, not profitable. New Zealand Canadian dollar makes a little bit of profit, and the equity curve is certainly going up. average trade is okay at nearly 17 pips. New Zealand dollar, US dollar, not profitable. US dollar, Canadian dollar, definitely not profitable. Let's have a look at that. Yeah, really bad equity curve. In fact, let's have a look at Canadian, Japanese yen as well, because that's, yeah, it's got a similar, very bad equity curve. US dollar, Swiss franc is barely profitable, and US dollar, Japanese yen is profitable with a not so good equity curve. So that was the results using almost the best exit duration tested on a portfolio basis rather than an individual market basis. The results in general are pretty disappointing, aren't they? In some cases, I think maybe reversing the rules and making a reversal strategy rather than a trend continuation strategy might actually work better. Maybe I'll try that next. But we did see some promise with Australian dollar, US dollar. So next I'm going to take Australian dollar, US dollar and look into that a little more deeply. We will apply the trend filter and we will look at exit durations. See if we can find some stability and something we can potentially trade live. Just before we do that though, I want to give you the chance to grab 3 more rule-based strategies. And these ones do have decent backtests. I've put them together with the rules and the backtest results in my 22-page Beat the Markets strategy guidebook. At the moment, I'm giving it away for free, so if you find the link in the description down below, you can grab that and instantly download it. If you want more, even better strategies, then you can enroll in my trading course. In there you'll find another 6 strategies, and I'll include the best ways to trade them. So if you're interested in that, the links will also be down below. Now, let's go and have a look at Australian dollar, US dollar. Now in MultiCharts, we're just looking at Australian dollar, US dollar. And I realise I haven't shown you yet how the strategy looks on the chart. I'll just show you this obvious little trade here. We've got a long trade and we've got our 3-bar setup, which is 1, 2, 3, and then we've gone long on the open of the next bar. This one was actually stopped out, and we can see that stopped out at this level here, which was just below the low of the lowest low of that 3-bar pattern. That was just an example of a trade. Now let's look at an optimization, and we're going to optimize both the look back filter length and the exit duration. So for the look back filter length, we're going to optimize from a value of 2 through to 42 in steps of 5. So we're going to go from 2 to 7 to 12, etc. in steps of 5. But remember that the value of 2 is equivalent to using no filter at all. And then we're going to optimize at the same time the exit duration, so bar exit, from a value of 1 day through to 30 days. And we're going to end up with 270 combinations. Now we can see the 2 variables of which we've optimized, the bar exit and the filter look back length. And if I sort these results in net profit with the highest at the top, if I then scroll down, I can quite quickly see that 251 out of those 270 optimization results are profitable. So that's really good. Looking at the most profitable first, we'll notice that we see some very low look back filter lengths. And remember, 2 is using no filter at all. So the most profitable in terms of net profit using no filter. If we scroll down, we can see that we've got 2s, 7s, 2s. We've definitely got low lengths on that filter, and that confirms what I tested earlier on the portfolio level, that using no filter actually works better. So knowing this information on the filter, let's do another optimization so it's a bit cleaner, and what we do is we'll eliminate the filter, so we'll leave the current value of the filter at 2, which is using no filter at all, and we just look at the exit duration. We could possibly go even a little bit longer. We go from 1 to 40 days. And here's the results. And if we look at the graph, we can see the exit duration on the x-axis down the bottom, and we can quite clearly see that the longer we hold, the more net profit we're going to make. Everything's profitable, which is good. And just so that we can have a look at some of the results in terms of the strategy performance report, let's just pick a value somewhere in the middle of all this. Let's pick 20 days. It's kind of in the middle. Certainly not the best, not the worst. So if I put 20 days, and let's find a trade where we've exited after 20 days. This one actually hit the stop loss. And this one here would have held for 20 days. So let's have a look at the performance report. That's what the equity curve looks like. Looking at the close to close, it's actually a very nice, very smooth uptrending equity curve, which is great. We made 3,000 pips. Got a large average trade at 66 pips per trade. That's good. Percent profitable is 50%. That's the long side of the strategy. That's the short side. The only thing I don't like about this is the fact that we've only got 46 trades. We've got almost 15 years of data and only 46 trades. Unfortunately, today's strategy has tested pretty badly on the daily charts of those Forex pairs which we've tested. The pattern did work quite well on Australian dollar, US dollar, but in all honesty, with such few trades per year, it doesn't get me excited enough to want to try trading it myself. Of course, I could take this same strategy and apply it to lower time frames. That might show some more promise because we'll be trading more frequently. It'll be taking some more trades. If you'd like to see the results of that, then please let me know in the comments. But the testing is what this video series is all about. I'll do the programming, run the tests, and then I'll record the results for your reference, whether they're good or bad. I'll update the results into the Forex strategy database and then move on to the next strategy. I'm sorry this strategy hasn't produced some decent results, decent enough that we can go away and use it and trade it ourselves. Hopefully, the next strategy will be better. I hope you've enjoyed the video and found it useful nonetheless. If you have, then please give the video a thumbs up, and I hope to see you next time. But until then, this is Jared Goodwin, and thank you.